Welcome. In this video, we will analyze the Xcn coin that is on the attack. We will see if it can be even more bullish. Please watch to the end to understand. First of all, we can see that there is a clear downtrend on the chart. This downtrend was indicating that the price was constantly making lower highs and moving downwards, and that sellers were dominating the market. But when we look at the recent price action, we see that this downtrend has now been broken. That is, the price has moved above this trend line and is now trading above this level. Trend breaks often give important signals that the market is changing direction. But to know if a trend has actually broken, you need to see if the price is able to test this level. This is exactly the process we are in right now. The price is going through a retest, going back to the broken falling trend line. This is a critical phase where traders often look for an answer to the question, will the broken resistance now become support? The retest is very important because the price needs to come to this level and get a strong buying reaction from here. If the price holds above the broken trend line and makes a bounce, it could be a strong signal that the uptrend will continue. Otherwise, if the price dips below this level again, the trend breakout may be considered a failure and a bearish move may start again. Right now on the chart, we can see that the price is touching exactly this broken trend line and trying to hold on to it. If the buying pressure from here is strong and the price gets an upside reaction from this level, the bullish movement could gain momentum. If the retest is successful, we could see a nice rally. When we examine the Elliott wave theory, we can see that the price action has so far completed the first and second wave. The first wave was formed by a strong uptrend, followed by a correction in the second wave that offset the uptrend. Such corrections are quite common in Elliott waves and do not break the main uptrend. We are now at a critical point for the start of the third wave. In terms of technical analysis, the third wave is usually known as one of the longest and strongest waves. At this point, the strengthening of the buyers in the market can make the price move upwards in volume. We can use Fibonacci levels to identify the targets of the third wave. Two important points appear here. The first target is the yellow line. This level should be carefully monitored, as it is an area where the price has received harsh reactions in the past. If the price reaches this level, the market may see some profit taking and a short-term pause. However, since the third wave usually forms a strong trend, if the buyers are dominant enough, the price could easily break through this level. With the break of the yellow line, the next target of the third wave will be the green line. The green line is important as a point where the price has already encountered resistance, and it will be necessary to gauge the market's reaction if it is reached. However, there is an important point to note here. If the price dips below the bottom of the second wave, according to the Elliott wave theory, this pattern loses its validity and the possibility of the start of the third wave disappears. But this is less likely to happen because the downtrend is broken. Another important pattern on the chart is the inverse shoulder head and shoulders pattern. This pattern is commonly known as a strong reversal pattern, which usually signals the end of downtrends and the start of an uptrend. Analyzing the price action right now, we can see that this pattern is in its final stages. The left shoulder and the head are clearly completed, and the price is trying to form the right shoulder area. When we look at the formation process of this pattern, we see that after a decline in the left shoulder, the price reacts and rises, then creates a deeper bottom in the head area and rises again. Now the right shoulder area is being completed, and the formation of this area can often be an important signal to show the strength of buyers in the market. If the price gets a strong reaction from the right shoulder and starts an upward movement, it is expected to move towards the neckline, which is the most critical level for the completion of this pattern. The neckline is one of the most important levels in the head and shoulders reversal pattern. This is a zone where the price has already encountered resistance twice before, and if the price breaks this level on volume, the target of the pattern comes into play. When setting the target, a bullish expectation is formed by the depth of the breakout. This means that after breaking the neckline, the price can cover this distance upwards as the pattern target. However, the important point here is whether the breakout is voluminous or not. If a breakout occurs on volume, the validity of this pattern becomes stronger and the probability of the price reaching the set target increases. It is good that the downtrend and this pattern are happening at the same time because they are both bullish. Looking at the chart in detail, we can see that there is a bullish order block just below the price. Since order blocks are areas where big players are buying or selling strongly, there's a high probability of a reaction if the price reaches these levels. However, the current situation points to a slightly different scenario. This is because the price has broken the downtrend we identified earlier and is currently in the retest phase of this trend. The previous trend line was working as a strong resistance, and the price had received downside reactions from this area many times. Eventually, however, the price broke the trend upwards and is now testing the retested level. In technical analysis, this is called a retest, and it is usually expected that the price will regain strength from this area and continue to rise. However, not all retests are successful, and sometimes the price can fake out by moving back below the trend it broke. Therefore, the current movements should be watched carefully. If the price gets a strong buyer reaction on the retest and moves upwards, it may continue its uptrend without going down to the bull order block. However, if there are not enough buyers in the retest phase and the price enters a deeper correction, then there may be a pullback to the bull order block at the bottom. It is useful to know this order block just in case. Looking at the price action, there is a bearish order block that forms a strong resistance point against the upward movement. Since this is an area where the price has faced hard selling and reacted downwards in the past, there is a high probability that the price will face a similar reaction again when it approaches this level. The bearish order block may be an area where large players' sell orders are concentrated and liquidity is high. In such areas, the price usually slows down, sudden pullbacks may occur, and downward movements may be seen unless a strong breakout occurs. Especially if the price has touched this level several times before and reacted downwards, this may indicate that sellers are still active and this zone continues to work as a strong resistance. If the price reaches here without a significant increase in volume, as it approaches the bearish order block, it may face strong selling pressure from this area and a bearish move may begin. However, if the volume is high when the price arrives here and the buyers try to break the pressure strongly, this block may weaken and the price may move higher. Now that the downtrend is broken and we are waiting for the third wave of Elliott, this is an ideal zone as an initial target. Looking at the RSI indicator, we see a noticeable uptrend. This trend suggests that the RSI is gaining strength and buyers are starting to dominate the market. As the RSI approaches this rising trend line, it is usually expected to take a support from here. If it touches this level and reacts to the upside, it could signal that the price may start to recover. Especially if the RSI has previously moved upwards, with support from this trend line, this area can be seen as a strong support. The RSI drifting towards this trend may indicate a short-term pause in the market and a weakening of momentum for a while. However, if this trend holds and the RSI reacts to the upside again, this could indicate that the price will experience a similar rebound. However, it is important to keep an eye on how the RSI reacts when it reaches this trend line. If there is a breakout here and the RSI dips below the trend line, it could mean that momentum is weakening and the price could test lower levels. In the opposite scenario, however, if the RSI bounces off the trend line and starts an upward move, it would be an indication that buyers are back in and the uptrend could continue. And remember that RSI and price move in parallel. When we look at the MACD indicator, we see that a top-to-bottom crossover occurs. This kind of crossover usually indicates a loss of momentum and that the price is under downward pressure. However, it is noteworthy that the MACD still hasn't broken below the 0 point. This suggests that the current downtrend is not yet a full-blown sell signal, and the price is still trying to find support. When the MACD line dips below the signal line, it usually indicates that selling pressure is increasing and the price may pull back. However, crossovers above or just near the 0 point don't always mean a strong decline. Sometimes such crossovers may only signal a short-term correction, and the price may rebound from strong support levels and start moving higher again. However, the critical point here is whether the MACD will break below the 0 point. If the MACD line breaks below the 0 point, this could indicate that the downtrend is gaining strength and the price could test lower levels. But I think the MACD will make another upward crossover from here because the price broke the downtrend and is now retesting. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.